He was worth over $1 billion. By sunset, he owed money. In 2008, a man named Adolf Merckle was one of Germany's wealthiest billionaires. He ran an empire spanning pharmaceuticals, cement, and machinery. But inside, he was a gambler. Merckle didn't just run companies, he bet on them. He used enormous amounts of borrowed money to buy shares in his own firm, VEM, which held many of his assets. By late 2007, he had piled on debts. He was leveraged roughly 5 to 1. That means for every dollar of his own money, he had borrowed 4 more. It was a house of cards. Then came the financial crisis. In early 2008, his main lender, a bank called BNLB, demanded he repay a massive loan. They gave him just weeks. Merckle had a plan. He would short Volkswagen shares. He believed the stock was overvalued. It was a bet that would destroy him. The day was October 27, 2008. Porsche announced it had secretly taken control of over 70% of Volkswagen shares. The stock exploded upward. It was the biggest short squeeze in history. Volkswagen briefly became the most valuable company on Earth. Its stock rose from around €210 to over €1,000 in a single day. Merckle was caught on the wrong side. His short position was massive. By some estimates, he lost hundreds of millions of euros in hours. His entire fortune, maybe €1 billion, was wiped clean. But that's not the full story. Merckle didn't just lose his wealth. He had used his own shares as collateral for loans. When the stock crashed, the banks seized everything. His family's holding company, VEM, was pushed toward insolvency. Merckle owed money he could never repay. He had let leverage turn a fortune into a liability. The pressure was overwhelming. On January 5, 2009, Adolf Merckle walked in front of a train near his home in Blaubeuren, Germany. He was 74. He left a note. His family said he was broken by the financial burden. The man who built an empire could not face losing it all in one day. Merckle's story is extreme, but the mistake he made is common. He believed he was smarter than the market. He forgot that leverage cuts both ways. Leverage multiplies gains. It also multiplies losses. When you borrow to invest, a 10% drop can mean a 50% loss of your own money. Margin calls can force you out at the worst time. Today, retail traders have more access to leverage than ever. Apps let you trade options, futures, and borrowed money with a swipe. The temptation is huge, but the math hasn't changed. Every leverage trade carries the risk of total loss. And when you're all in, one bad day can be the end. Ask anyone who bought the top in 2021. Merckle's story holds a larger truth. Wealth is easier to lose than to build. And the bigger you get, the harder the fall. No one thinks it will happen to them. He knew the risks. He was a sophisticated investor, but he let conviction blind him. He made one bet too many, and the market demanded everything. The lesson is not to avoid risk completely. It's to know how much you can afford to lose. Real wealth is built through discipline, not through betting the farm on a single idea. Every day, someone opens a trading app and takes a flyer. They think they're different. They think this time is different. But the history of finance is written in the tombs of overconfident speculators. Adolf Merckle was a billionaire. He couldn't get off the train in time. That could be anyone who ignores the margin of safety. And maybe rethink that leveraged position before the market reopens. Merckle's bet was not just on VW. He bet the farm. His entire empire relied on one trade. One wrong move and everything collapsed. He forgot the golden rule. Never risk what you cannot replace. He risked everything, and he lost everything. There is a hidden force in markets. It is called margin call. When your collateral drops, brokers demand cash. If you cannot pay, they sell your assets. Merckle faced a cascading margin call. His lenders pulled the plug. He had no backup plan. That was his real mistake. Leverage is like a fire. Small flame, warm. Big flame, deadly. Merckle used fire to cook, but he forgot to watch the sparks. The spark came from Porsche. Porsche's move was legal, but it was a trap. Merckle walked right in. He never saw the door close. After the crash, Merckle tried to save his firms. He sold assets. He begged for loans. Banks said no. His family begged him to stop, but he was addicted to the game. He could not accept the loss. Pride killed his last chance. The same pattern repeats today. Traders borrow to buy crypto. They borrow to buy options. They think they can outsmart the market. But the market is a machine. It does not care about your story. It only cares about your margin. One bad day and you are gone. Merckle's final lesson is simple. Wealth is not money. Wealth is freedom. Leverage steals freedom. It chains you to the market. If you want to stay free, trade small. Use cash. Sleep well. Next, the trader who made millions, then lost it in seconds. Merckle was not alone. Other billionaires made the same bet. They all lost. One was a hedge fund manager. He shorted Volkswagen too. His fund collapsed overnight. He went from hero to zero. The pattern is old. The pattern repeats. Today, leverage is everywhere. Crypto exchanges offer 100x. Retail traders borrow millions. They think they are smart, but the market does not care. Merckle's mistake was not the trade. It was the size. He bet more than he could lose. That is the line. Never cross it. Here is the twist. Merckle could have survived. He had other assets. But he refused to sell early. Pride cost him everything. Subscribe to see why pride is the most dangerous emotion in markets. Next episode, the trader who made billions shorting the housing market. You will not believe